If I had a gun to my head and said, you guess, I would say 6,000, 6,500, maybe 7,000, because Jeffries used to be Jeffries Beige, and they were primary distributors for the U.S. Mint and all the major mints. They know gold. They're not in the business anymore, but they know gold. They said 7,000 to 7,500 is before we see a little slowdown. 7,000 maybe. I don't know, 6,500. And if I had to say silver, $175 wouldn't surprise me at all, and probably much higher by the end of the year. But again, I'm not a guess guy,
No.
but I wouldn't be surprised to see it.
Bitcoin, this is just a physical representation. There is no physical body for it, is not this. This uses energy. This stores energy. This is based on formulas. This is based on work. This is used in one place. This is used in 33 places. It's entirely up to you. You do whatever you're comfortable with, but it looks like the jury is saying, no, this is not gold.
U.S. is letting gold higher to devalue, letting gold go higher and incentivizing it to go higher, to peg it to the bond market, to reshore manufacturing. Look, Ray Dalio just came out and said 60% of the country has a reading proficiency under that of the sixth grade. We're $200 trillion in debt when you add in Medicare, Medicaid, Social Security, government military pensions. We don't make anything, so we're broke, we're insolvent, we're uneducated, we don't make anything. Guess what? Here comes AI just in time to the party to kneecap entry-level jobs and even white-collar jobs like accounting. My son was getting paid $80,000 a year by Price Waterhouse to analyze a real estate investment trust balance sheet. What the hell do they need him for when AI does it like that? So now he's working for me. The point of it is this, is that the world is changing. And if we don't do something, we're dead. We cannot be reliant on the rest of the world for everything we need, from aspirin to aircraft parts. And so we are reshoring manufacturing. How do you do it? You have to shed the reserve status. Griffin's dilemma says so. You have to let the dollar collapse in the face of rising gold. And if you can bring it back at no upfront borrowing and build the manufacturing by pegging it to gold, zero coupon bonds, and let gold go higher and higher and higher, by the time you pay it off, it's a fraction of what it was when you sold the bond. To me, it just makes so much sense. And I don't know why maybe I'm stupid, Kai. I've said a lot of things on your show that no one ever said. Like when we started talking about things, I was talking about the BRICS. Yeah. Nobody was. Now it's everywhere. I'm saying this, I hear no one saying it. So either I'm stupid or I'm onto something, or have the courage to say what I believe. It's a little bit of both.
Are you curious about investing in gold and silver, but feel held back by fear or confusion? This ebook is designed especially for new investors who want clarity, not complexity. It breaks down gold and silver trading strategies in a simple, practical way. No jargon, no hype. Why wait? Hurry up. Please visit this link to get your copy today and use code WZCABQ9V for a huge discount. More than 1,000 people took the first step with this ebook, and today they're living proof that smart investing changes lives. Start investing fearlessly, wisely, and with a clear strategy. As artificial intelligence advances at an unprecedented pace, the global economic structure is transforming faster than policymakers can adapt. Roles once considered stable, such as accounting, analysis, and compliance, are increasingly exposed to automation. Traditional entry-level career pathways are shrinking, weakening the long-term foundation of productivity and workforce development. At the same time, decades of offshoring have left the United States consuming far more than it produces. Bringing manufacturing back home is no longer a political talking point. It has become a strategic necessity. Yet rebuilding industrial capacity demands enormous capital, reliable energy, and, above all, confidence in the monetary system. This is where currency credibility and gold return to the spotlight, not as relics of the past, but as central pillars in the emerging economic order.
What China is doing right now is setting the stage for the BRICS. And I think they're doing that. They're calling it expansion, internationalization of the yuan to not antagonize Trump. So here's what they're doing. First of all, they are making their digital yuan immediately convertible into gold without going into dollars. That's been done. And you would do that through the Shanghai Metals Exchange, right? When gold leaves China, it has to come out of Hong Kong in order to be exported. So they're expanding they have an expansion plan of their Shanghai exchange. The first one was just completed in Hong Kong. So let's just play this out. China buys oil using either the M-Bridge or the CIPS, the cross-border payment system, which is both are free from, by the way, M-Bridge and the unit, which we've talked about before, it is now operational. They've traded on it slowly. Don't tell anyone, but it is happening. So they trade with one another over this platform that does not allow for SWIFT interference. Digital yuan to buy oil from Saudi Arabia. Saudi Arabia has this digital yuan, but it's now convertible into gold. I don't want to hold it, maybe. Bang, we send it back and we get the gold out of Hong Kong through the Shanghai Exchange. But they're expanding their ecosystem multi-jurisdictionally. Guess where vault number 2 is under construction?
Saudi Arabia.
Saudi Arabia, who is also the 5th participant next to China, Hong Kong, Thailand, and the UAE in M-Bridge, a cross-border payment system free from SWIFT. They're building it all throughout these vaults, all throughout the Belt Road, in Asia, in Africa, in South America. So you trade your local currencies, strengthening your own ecosystems, being responsible for your own monetary ecosystem instead of strengthening the US, and then settling imbalances in gold and deliverable in a series of multi-jurisdictional vaults. That is what's happening. And to one step further, the Chinese just signed up the Asian countries, the acronym ASEAN. They are China's largest trading partner by far. They're all the big countries in Southeast Asia. They have 800 million people, twice that of the US, 30% of global GDP. They're all settling now across the CIPS or the M-Bridge. And here's the interesting thing. All of these trades, largest trading partner by far, used to be in dollars. Chips away at the settlements value of the dollar. And then when you have all those dollars, you have to hold them in treasuries, right? And earn yield on those dollars instead of let them just sit there. So they would put the excess reserves in treasuries. Now they're buying gold instead, which not only has doubled the performance of the 10-year treasury over the last 25 years. Look at the last 2 or 3. 2 years ago, gold up 40%, the 10-year up 4.5%. Last year, gold up 80%, 10-year up 4%. I mean, and it can't be sanctioned. So all of the money going into gold instead of treasuries massively cuts into the reserve status. If you don't allow yourself to think outside the damn box, you are going to be a victim. You have to see what's happening. And the fact is, you got to listen to Kai Hoffman or me or any of the other people here to see this. And if all you do is watch the mainstream, you may be very well read, but you're reading the wrong stuff.
One proposed solution quietly gaining momentum is a partial monetary reset anchored to gold. The idea is simple in concept, yet radical in implication. Allow gold to rise significantly against the dollar, easing the real burden of long-term debt while restoring confidence in the monetary system. By issuing long-duration or even zero-coupon bonds indirectly linked to gold, governments could fund industrial rebuilding without triggering immediate borrowing pressure. Historically, rising gold prices have signaled currency debasement, but they can also serve as a mechanism for restructuring. In this framework, gold is not a relic of the past. It becomes a release valve for systemic stress. A controlled reset, guided by policy, may ultimately prove less destructive than a chaotic collapse imposed by the markets. Hit subscribe and stay one step ahead.